I'm Nick Snow, watching Government for Oil and Gas Journal in Washington, D.C. Sustainable energy may have a growing percentage of the International Finance Corporation's portfolio, but that doesn't mean the World Bank affiliate has written off oil and gas. They have continued to be a stable part of our portfolio, said Lance Christ, IFC's global head of natural resources, during a recent interview. He explained that the world's developing nations face two main challenges: meeting growing energy demand and trying to monetize their natural resources. Renewable technologies are gaining ground as energy alternatives grow more economic, but governments still feel economic pressure to develop natural resources, Christ said. The focus has shifted increasingly to natural gas, he noted. It has become essential because it has a substantially better climate and energy profile than coal or crude oil, Christ said. Small-scale liquefied natural gas projects are helping suppliers tap previously stranded resources, he told OGJ. The proliferation of floating LNG facilities is particularly significant, he said. IFC continues to finance projects which contribute to developing nations' long-term economic growth, evaluate investments to assure that deals are fair and free of corruption, help clients mitigate risks by operating within environmental and social performance standards, require publication of payments to governments, and broaden projects' benefits by assisting with community development programs and purchasing more goods and services from local suppliers. Christ said that in the last year, IFC worked on two large downstream gas projects in China to help alleviate air pollution and provide reliable supplies. It invested $75 million, and its African, Latin American, and Caribbean fund invested $30 million to help Seven Energy begin to develop more Nigerian gas for domestic consumption, and contributed a $300 million loan with a 17-year maturity to the Peru LNG project's $2.05 billion financing package. Obviously, it depends on the price, Christ said. We deal with domestically produced gas, shipped through pipelines, as well as LNG imports. Falling oil prices have challenged the economics. Growing use of floating storage and regasification units, usually refitted LNG tankers which are permanently moored offshore to receive LNG for regasification and transmission to power plants and other onshore customers, is a positive trend. There still are challenges in Caribbean communities like Haiti, which continue to rely on diesel fuel to generate electricity, Christ told OGJ. These are very small markets, and countries don't always have good credit. The notion of breaking a larger supply into smaller parcels is good, but no one has cracked that nut yet. Oil still matters, less as a way to address domestic demand and more as a way to help a country meet its economic and social needs, he indicated. That's Watching Government for this week. In Washington, I'm Nick Snow for Oil and Gas Journal.